What up, Financial Fit Fam, and welcome back to the next episode. Today, we're gonna take your personal finances to the next level. We're gonna move beyond saving, and we're gonna head towards the promised land of investing. You're gonna hear people all the time say, I trade stock, or I'm a day trader. Then you're gonna have another group of people that say, I'm an investor. And although the process might be somewhat similar, their actual goals are significantly different. Stock markets are like floozy woozy.
Rule of Wall Street. Nobody, I don't care if you're Warren Buffett or if you're Jimmy Buffett, nobody knows if the stock is going to go up, down, sideways, or circles, least of all stockbrokers. Right?
A trader is someone that is looking to buy a stock or a fund at a certain price and then sell it at a higher price within a short time frame. Normally they can hold a position for an hour, a day, a couple of days, a week, a month, a couple of months. But the truth is, a trader is looking to get in and out and reap whatever benefit they can, as much gain as possible. They're not holding positions usually for longer than a year. An investor, vice versa, it's about the accumulation of wealth over a greater period of time. You're buying that company because you see value in it and you know that the growth opportunity of that company or the revenues of that company is usually exponential. Okay? So when we talk about trading versus investing, they're similar, but there are large differences between the two. Today we're going to focus more on the investing side versus trading. Okay, the truth is, if you buy a stock for a lower price and sell it for a higher price, you're always going to win. My mother once told me, you never go broke by taking a profit. That could have been Warren Buffett. Or pretty much any investor at that point. Today is the day you're going to buy your first stock or fund. This is huge. This is monumental. This is a milestone. You should be proud of yourself. You've done everything right to get to this point, and you put yourself in a great financial position. So now it's about taking it to the next level. Now is the time to make your money work for you. So let's give you a couple of quick steps that will ensure that you can be successful and take the guesswork of how to buy your first stock. First things first, you have to set up a brokerage account. What is a brokerage account? Isn't that just like your traditional bank? Absolutely not. A brokerage account is a company that will take your US dollars and allow you to buy stocks and funds on publicly traded markets. Okay, so it is different from your traditional bank account. We're gonna break them into separate categories. We have our legacies on one side, and then we're gonna go more with our modern millennial group on the other. There are pros and cons to each. I'm gonna talk about the ones that I use. By no means, you do not need to use these brokerages. However, these are the ones that I feel most comfortable using, and some of them are easier for those that are beginners to making their first investment or beginners to Wall Street. I do have experience using legacy accounts. This would be E-Trade, Ameritrade, Vanguard, and I still use my Vanguard account. I find it relatively easy to navigate. It's a little bit old school in the user interface, but overall the tools are great, and it's what I've really put a lot of my long-term investments into. On the opposite side of the spectrum, we have our more modern or our millennial brokerages. And I've used these as well. As a matter of fact, I've transitioned a lot more from the legacy into the millennial brokerages because of just the easiness of which to use each of those products. So some of the ones that I've used thus far have been Webull. That one I'm kind of newer to, and I wouldn't necessarily recommend if you're brand new into the finance or into the investing space. The second one I've used is Robinhood. This one's a personal favorite of mine. What I really like about Robinhood is it's so user-friendly. It's got a sleek user interface design. It's simple, click of the button, a swipe of the finger, and you can buy or sell any stock or any fund. The other benefit is it's not only in the traditional markets, it's also in cryptocurrencies. And for those of you that don't know me all that well, I do enjoy getting my hands on a little bit of Bitcoin or Ethereum, buying and selling those for a profit, and it's something that we're going to talk about in the future, but not necessarily a ton during today's video. So it has both access to the traditional market and the cryptocurrency market. So for me, that's a win-win. Another newer brokerage firm that I really like is M1 Finance. Here's the reason. It has a great simple user interface. And secondly, it allows you to build out your portfolio the way you want. So for example, let's say I wanted to own Apple, Microsoft, and McDonald's. Let's just throw McDonald's in there because it's not a tech stock, so we'll add that to the basket. Okay? It puts all three of those stocks in one basket, and then you tell it what proportions, when you make deposits, it should invest for you. So for example, let's say I'm going to go with 50% of my investment going into Apple, 30% going into Microsoft, and 20% going to McDonald's. For simple math, let's just say I make a $1,000 investment. Okay? Once I make that investment or that deposit, it will automatically take $500, put it into the Apple stock, buy shares of Apple. It will take $300 and put it into shares of Microsoft, and it'll take the additional $200 and put it into shares of McDonald's. Even if you can't afford a whole share, it will allow you to buy fractional shares. Okay? Same thing with Robinhood as well. So if I don't have enough to buy one stock of Tesla, which is trading right around $330 right now, okay, I only have $100, I can buy a third of a Tesla share. So part of the benefit of some of the millennial or newer brokerages is the fact that they allow you to buy fractional shares, where a lot of the legacy brokerages aren't quite there just yet. In the past, when you would buy or sell stocks or funds, you normally had to pay a fee, and it varied from brokerage to brokerage. It was anywhere usually between $5 upwards of about $15 per trade. So every time you would buy a stock, you had to pay whatever the stock's value was, plus an additional, let's call it $10. Now when you sold that stock, let's say in 5, 6, 10 years, 20 years, you also had to pay a fee for selling it, that $10 again. So you were losing profit by paying all these fees. The best part about today's brokerage firms, even the legacy brokerage firms, is that a lot of them have zero commissions or zero fees. If you want to use any of the brokerages that I use, just look in the description below. If you set up an account, an initial deposit of $100, you'll receive 1 or 2 free stocks, or if you go through M1 Finance, you'll receive $20 to get you started. Step number 2, you have to fund your account. You need to put money in order to buy your first stock. And there are really 2 ways to do that. The first is usually through a quick link. So the brokerage firm will give you different options. All the large major banks here in the US, simply click on it. You enter your banking information, so your username and your password, and normally within 1 to 2 minutes, you'll have direct access to making any transfers. So if you bank with Wells Fargo, you can transfer Wells Fargo money from Wells Fargo into your new brokerage account, and then you'll be ready to trade. The second way is through micro deposit confirmations. And what traditionally happens is the brokerage will test to make sure that it's truly your account. They will send a very small amount of money, usually pennies, from your brokerage account, which you don't even have any money in yet, into your traditional banking account. After a few days, you'll be able to see that there's been a transaction on your traditional banking, that there's been a small deposit. You will look at what those deposits are. There's usually 2 different deposits, and they're in the form of pennies. You will then go back into your brokerage firm, tell them that you've received a deposit for, let's just say, 8 cents and 12 cents. That will then confirm that you have access to that account, and now your traditional bank account is linked with your investing account or your brokerage account. So how much money should I start with? What should be my first investment? To be honest with you, it's completely up to you. I have no clue. I don't know your finances as well as you do. You have to invest what you feel comfortable investing. Once you have your 6-month emergency fund set up, at that point you should start switching your focus and also your resources, in this case your money, over to investing, because that's how your money is actually going to grow. All right, now it's time for your first investment. This is super exciting. This is what you've all been waiting for, is to buy your first stock, buy your first fund, and here's how you're going to do it. Start with research. Before you buy any stock or any fund, you should always understand what you're buying. If you look under your brokerage account, there should be research tools that allows you to read about the profile of the company, locations, how many employees they have. You should be able to see the financials. So you should be able to see income statements, cash flow statements, balance sheets. You should be able to see their chart. So over the longevity of that stock or that company being in the public market, how is it done? How is it trending? Is it trending upward? Is it growing exponentially? Those are all positive signs, and those are all things that you can figure out before you actually purchase. All right, I would encourage everyone to find out that information before you make that initial investment. If you don't have a brokerage account, it doesn't mean that you don't have access to this information or these tools. Use Yahoo Finance. There's a lot of great material that you can find on there, and you can research as many companies as you like, so that when you get to that investment phase and you want to make that first purchase, you're going to be locked and loaded, ready to go. So now you have all the information ready, you've calculated all the data, you've had everything that you need to feel comfortable with buying your first stock. So here is how we are going to do it. First and foremost, at the top of your screen or to the right side of your screen, depending on which brokerage you're going with, should be a small search bar. Put in the ticker symbol of the company or write the company's name that you want to purchase shares of. Once you search that company, a page should come up with usually the company's charting information for the last several months or couple of years. And then on that page, you should see the option to either buy, sell, or trade. If that's the case, click on the action that you want, buy or sell, or click on the trade button. When it asks for action, choose buy. So below the action should be the quantity. This is the amount of shares that you want to buy of that specific company. And your shares are dependent on how much money or how much cash you have on hand in your brokerage account. An example, a company trades for $50 per share and you have 100, well, you'll be able to buy 2 shares. If you have $1,000 and the company's trading at $50 per share, you'll be able to buy 20. So it depends on how much money you have in your brokerage account. Below that will be the price type. And there are 2 types of buying actions we're going to discuss today for simplicity purposes. The first of which is market. Market means that whatever that stock is currently trading at, you will buy it at that price. For the long-term investor, we're not so much about timing the market. We just want to get in and accumulate shares at a reasonable price over time, because ultimately if we hold on to long enough, we're going to see some growth and some gain. The other type is a limit buy. And limit means that you're willing to pay a certain price that you've dictated to the brokerage or lesser. So if we go back to that example of a $50 share, I might put a limit buy at 45. The brokerage firm will not buy my shares until it hits 45 or lesser. The downside of using a limit buy is if it doesn't go down, if the stock doesn't go to 45, that order will never be filled. So below price type will be duration. If you're buying it at market, it will execute your order immediately, so the duration doesn't really matter. If you're limit buying, you can choose 2 options. Either it's good for that day and that day only, so as the market is open, or you can choose good till cancel. That means it will extend out as long as it possibly takes for your order to be filled at the price that you want. A trader, someone who gets in and out of trades multiple times per year, is going to use limit buy, where the long-term investor is going to be more commonly using the market buy. Now you have all the information input into the system. You'll total how you want to buy it, how many of them you want to buy. All you need to do is hit the preview order button, and then once you confirm all that information on the next page, you hit submit, boom, it's off to the stock gods, and you've made your first purchase, or you have at least placed your first order. So congratulations, welcome to the stock market. All right, step number 4, and I don't even know if this is really a step, it's more like a discipline. Stop looking at it. Don't freak out if the thing drops 2% in a day. In the long term, it don't matter. We're not trying to trade the stock. We're investing for the long term. In 2 years, 5 years, 20 years, 30 years, 80 years, I don't know, however long you're gonna live, that stock will be well above what you paid for it. As long as you invest in a good company with good fundamentals, you will be okay. All right, step 5, set up reoccurring deposits. In your account, most likely somewhere in the settings, you can set up a reoccurring transfer from your bank account into your trading account or into your brokerage account. I highly suggest that you continuously making deposit into your account whether the stock market is high or the stock market is low, because you always want cash on hand to invest. So let's do a quick recap. 1, set up your brokerage account. 2, fund your account. 3, make your first investment. 4, I know you heard this before, stop looking at it. 5, set up reoccurring transfers and practice dollar cost averaging. I'm so proud of you guys. You made your first stock or fund purchase today. You are on the train to Wealthy Town. If you want to grow your intelligence capital even more than just watching these YouTube videos, Go in the description below and look towards the bottom. Those are my favorite books around finance and investing. They've helped me, and I'm sure they can help you all the same. Until next time, save, invest, and grow. Ciao, ciao.